So why do we look at these calendar events? Because we're looking for high probability trading opportunities. Now, on the 12th of June, we had the Fed meeting. And one of the things we're looking for here was a more hawkish outlook from the Federal Reserve. And what we're looking for is a dot plot change from 3 rate cuts to 1 rate cut, core PCE projections rising to 2.8%, 2.3% for 2025. We're also looking for the unemployment rate staying unchanged and the GDP staying unchanged. And then we're expecting dollar buyers, euro, US dollar sellers, and gold sellers. Now, this was a tricky decision because we just had the CPI out earlier, and that earlier CPI print had just slightly changed the narrative because it was a miss and that was weakening the dollar. So we were looking for an opportunity for dollar strength in the evening, and we were looking for an opportunity for potential dollar weakness that we got with the CPI print in the afternoon. So this was a tricky decision. So even though, like, personally, I was there at the time and we got what we needed here for a dollar strength, I didn't take the trade because the reaction in the dollar wasn't as strong as we were expecting. However, we did still reach the sort of move that we were expecting. Now, if you just take a look here at the Dixie, right? I'll just move this here, right? And we'll see how this worked. You see, on the Friday, right, we had, sorry, not the Friday, on the Wednesday, we had that big dollar sell story on that weak CPI, right? And then when we had the Fed meeting, the dollar picked up. But the way it picked up was very, very slow. It wasn't strong enough to give me a conviction. I was expecting more the kind of the opposite reaction that we saw out of the CPI print when the Fed were more hawkish. But you can see the dollar has picked up since then. Now, it was a tricky trade. I was doing it live and I just held out of a euro US dollar short, even though that's what we were expecting, just because, you know, expecting much more reaction than we actually got. So you saw the weakness in the dollar, right, on the CPI print, which is what you expect. Then the strength in the dollar came in with the Fed decision. You can see it was quite a mild reaction at first. It didn't really pick up till the following day. So it was a tricky trade, but nevertheless, it was something that we did pick up in our fundamental cheat sheet. So it is still worth looking at. Some people may have taken it. It was certainly identified in advance as a actionable event because we got what we were looking for. And if you just take a look here at the Fed interest rate decision, if we just look at the summary of economic projections, you see, look, we got PCE 2.8 or higher, right? Up from the March projection of 2.6. PCE headline 2.6, up from the 2.4 March projection. And look at the federal funds rate, the dot plot. We saw that markets, the Fed now are only expecting 1 rate cut this year. And they're expecting 3 in March. So it was much more hawkish. You can see here the dot plot change, and this is just the quick summary so you can see at a glance. So that's why we look at the cheat sheet, and that's why the calendar rather, and that's why we create a cheat sheet to find these high probability opportunities ahead of time. Now, looking at this week, we can see a few interesting events. The first one doesn't really come until Tuesday, where we have the German's view economic sentiment and current conditions. Now, we have seen some pretty negative sentiment around the Eurozone due to the European parliamentary elections, which prompted a surprise election being called in France. And most analysts are expecting that to weigh on the euro moving forward. So this is just interesting to see if we see any significant improvement in the German's view details, and if we see a little bit of a better pickup sort of coming through from German sentiment, then that could lift the euro, but we'd probably expect to find rally sellers. So just be conscious of that. German's view data is important, but the parliamentary elections and concerns about a swing to the right is worrying analysts at the moment. So if we do see an uptick in the German data, you might see a little move higher in the euro, but expect to find a rally sellers. However, a surprise move here in the German's use sentiment could start to lift the euro against the pound in light of the Bank of England's meeting on Thursday. Now, just taking a look here at the CPI data that we've got coming on Wednesday. This is going to be important. Now, if we take a look at the Bank of England, we can see that in their last interest rate meeting, we had the Deputy Governor Ramsden moving to a rate cut stance. And Ramsden joined Dingra. And so what we're looking for here is any other Bank of England members looking for the Bank of England to cut rates. If we see that kind of movement coming from any other Bank of England members, then it wouldn't be a surprise to start seeing the pound falling. Now, one thing that would move those Bank of England members is if we started to see UK inflation moving surprisingly lower. Now, look at that CPI services print, very important. Last one came in at 5.9%, so it's still very, very high. But if we see inflation ticking lower, it's expected to come in at 3.5 for the core and 2 for the headline. So analysts are expecting the inflation data to fall from the prior of 3.9 and down again from the prior of 3. Sorry about that, got 2 core readings. We just look at the headline. Where are we? Down from that headline 2.3 for the headline. So what we're really looking for here is a real clear indication and opportunity to sell the pound, and that could start to come in early with this CPI print. It is expected to fall, both the headline and the core. If we see that coming in below market's expectations, look for a significant move, potentially lower in the pound. And then as we carry on into Thursday, we've got the SNB interest rate decision. Now, the Swiss franc has enjoyed a little bit of strength recently, and the reason for that strength has been the comment from SNB's Jordan, who was touting upside inflation risks around the end of May, early June. And we've seen the Swiss franc increase since then. Now, short-term interest rate markets are pricing in a cut from the SNB, 79% chance of a cut being expected at the moment. So that's going to be really crucial. If we see a surprise hold, then we could see a little bit of extra strength coming into the Swiss franc. So that's definitely one to watch, particularly as we move forward. Now, taking a look at the Bank of England decision, obviously here we're looking for more Bank of England members looking for a vote cut. That's the most important thing. We want to see that vote cut come in. And if we see more than 2 members, obviously this will be updated nearer the time, but if we see more than 2 members voting for a cut, that's probably going to shift markets. We'll check the expectations nearer the time, but we had 2 last time, so if we get 3 or more, then you'd expect that to send the pound sharply lower. Because the pound's been picking up recently in the CFTC report, so it is vulnerable to selling if we do get that dovish outlook from the Bank of England. Now, taking a look through Thursday, we haven't got much on the agenda. The only thing that I've missed is the Reserve Bank of Australia interest rate decision. Now, that is likely just to be a placeholder meeting. So that's, probably why I've overlooked it, because what Australia are looking for is they're looking for clear indication that the inflation battle is being won. The last inflation reading has concerned the RBA, and you can see, yes, it came in at 4%, but it was above the expected of 3.8% for the first quarter. So, Governor Bullock said recently, there is more, it's more to it than just inflation data. However, the inflation data is so important that because this RBA interest rate meeting is happening before the next inflation print, and the most important one's coming the end of July, this is likely just to be a placeholder meeting. So not expecting much moves from the Australian dollar around that RBA interest rate decision. Okay, folks, that is all. Just check there's nothing obviously standing out. No, that's it. The only other slight thing is the Japanese inflation data for the core CPI reading. If this comes in, a big surprise to the upside, this might start getting the Bank of Japan pricing in a interest rate hike for July. They met last week. No surprises, kept interest rates unchanged. Governor Rader said, a July rate hike is possible depending on the data. So very high inflation here. They are expecting inflation to tick up. That's likely to move the Japanese yen if this comes in very hot. But it would have to be very hot and enough to really sort of worry the Bank of Japan, and they are very, very slow moving. Also got on the Friday, German, Eurozone, UK PMIs. We saw a big divergence here between the Bank of England and between the UK rather and the Eurozone. We could see some upside in the euro pound. Definitely one to be looking for. We'll cover that nearer the time. And then we've got some US global manufacturing services PMIs could be interesting. Although remember the last sort of move we've had from the Fed has just sort of helped lift the dollar. They've revised interest rate expectations higher. They only expect one rate cut now from 3 in March. They're expecting inflation to be higher, GDP to be the same, but they are seeing a higher for longer narrative. That's been lifting the dollar, and we'll be keeping that narrative in mind when we get to the PMIs on Friday. That is all for now. We'll be updating the cheat sheet with the specific deviations we need to look for. Otherwise, that's all for now. Bank of England is the main decision to be looking at for Thursday. Thank you and take care.